Hi there, this is Alvin from Dr. Wealth. Imagine holding a stock for 10 years and you realize that you still lost money. And that's exactly what happened to Singtel stock. Because if you bought Singtel stock 10 years ago and you're still holding it today, you would have lost 2% overall. And that is even after accounting for dividends. So I believe that it is very frustrating for a lot of shareholders of Singtel, and hopefully this video will give you a bit more color, a bit more analysis to what's going on. So the very first thing is about one of its key subsidiary, which is Optus, telco in Australia. So they suffer an outage, and recently the share price went lower, right? As the time of recording, the share price is down 2% for the day, and that made a one-year low for Singtel. Even though Singtel stock have not been moving much, but yet it still managed to go down another 2% to make a one-year low. So it is contingent to the Optus issue, and the Optus CEO has also resigned and a new CEO is coming on board. So that gives a lot of uncertainty of what's going to happen next, and the outage issue is still fresh on investors' mind, and hence that was probably one of the reasons why the share price was being sold down. And if you look at this revenue segment for 2023, you will realize that Optus is actually a very critical revenue driver for Singtel, because more than 50% of the revenue is derived from Optus. Okay, so it is a critical component, and hence whatever happened to Optus would have direct impact to Singtel share price as well. And nobody knows exactly what has happened to the outage, what caused it. Initially, there were reports saying that it could be due to the software upgrade that came from Singtel that affected the network stability of Optus. And eventually Singtel came up and say that it's not related to the software upgrade, so nobody knows actually what is going on or what went wrong. And I think that's worse. If they say that it's a network upgrade issue, I think it's still fine. Right now, nobody knows what the issue, and the public is still in the dark, and people don't like this kind of secrets. And the second thing that I think what's plaguing Singtel issue is not just a Singtel problem, but it applies to all the telcos around the world, is that telco access, right? Whether is it your internet, whether is it your calls, your SMS, which rarely people use, more of a mobile internet, right? It gets you connected with people that you want to connect with. And that also includes the broadband and Wi-Fi and things like that. So telco services has become very essential. Some even put it as a psychological need, physiological need, together with food and water. And it is true, right? Because we use internet almost every day. Once you have that connection, it's very hard to go back to the days where you can live without internet. So given that this issue of being a need is that usually government would want to price it as low as possible. Okay, so it becomes a public good, because lower prices means that more people can access it, and you can level the playing ground, right? Rather than some have it and some do not have it, and those who do not have internet access would be at a very great disadvantage. Okay, so that is the issue with this telco being a public good. Internet access has become commoditized. And hence, how the government regulate prices, of course, they can set price ceilings and things like that, but usually such policy is not useful. And in contrast, what they will do is that they will introduce more competition, because the more competition means that there will be more people sharing the pie, and they will make the prices more competitive as well, right? They will try to lower it to a market stabilization point, and hence that will help bring down the prices for the masses. And when these prices are going down, there is margin compression, lesser revenue for people, lesser revenue for all the telcos to share. So that's not a good thing, right? So as being a shareholder of telco, that's what is being impacting for the last, I think, 10 over years, where internet become a lot more prevalent and telco become more commoditized. And the worst is that there's no product differentiation. Like, for example, how do you differentiate if a call comes from a Singtel, or come from a StarHub, or come from an M1 network? Nobody can tell the difference. And hence, everybody just focus on the price. And there's a price war going on, and there's this new mobile network virtual operators, and that even caused the prices to spiral down it further. And hence, there's no growth for the telco sector for a long time. And Singtel original strategy, they did focus on their core business, which is telco, right? And they have their international expansion. They went to invest in Optus, they went to invest in Bharti Airtel, they went to invest in Globe, quite a number of these telcos around the region, and even in India and Australia. So it is quite a sound strategy, right? Because you know your business best, and Singapore is a small market. The only way to grow is to buy overseas business or to start to set up, grow in other countries, right? Which is not easy because usually telco is very heavily regulated, and government wants their own domestic companies to be controlling the network because this is a strategic asset at the end of the day. So Singtel end up buying them. But the problem is that all the telcos around the world are facing these commoditization issues, and hence they're all suffering from lack of growth, lack of revenue growth, and lack of high margins. Okay, so this is a common problem, and hence overseas expansion does not solve Singtel's problem. So Singtel also started to look beyond just its core business, right? Beyond telcos, they started to go into multimedia kind of strategy, trying to do more technology-based kind of business. They even started this ebook service, right? Selling ebooks like Amazon in 2011, right? I don't know how many of you remember there's this service called Scoop, because I didn't remember until I really dig into the history of Singtel that this actually exists. We all know now that it's a cease operation, right? Just 2 years after it was launched, and of course Amazon is still a very big winner in this ebook space. So that is the one of the forays that didn't succeed, and there's more. Okay, how many of you remember Hungry Go Where, which is quite a popular, used to be quite a popular food review website, and Singtel bought it in 2012 for $12 million, and in about 9 years later it shut down, and it was eventually sold to Grab, right, in 2022. And the initial plan was to merge or integrate this Hungry Go Where with its insync.com, which is like a search website. So they also wanted to challenge Google, right, in the realm of search, but limited to just in Singapore, right? They want to be a better search engine in Singapore, more lifestyle focused, and hence Hungry Go Where is supposed to fit into the picture. But somehow it also didn't work out. InSync also closed down in 2019. So we can see it's not that Singtel didn't do things outside, didn't innovate. They tried, but a lot of all these ventures just didn't work out for them. And they also bought this cybersecurity company, right, which is Trustwave. They bought it for $810 million in 2015, and recently they sold it at a loss at $205 million. So this also didn't work out well. So we can see that a lot of all this investment, all this diversification just didn't work out. And the only remaining venture that I think may have some promise is the GXS Bank, which is the joint venture between Singtel and Grab for the digital bank license in Singapore. Right? So it's in operation, but it's still too early to talk about how successful they will be. There is also competition, right? And based on Singtel track record, it doesn't seem like its investment has been paying off. So I think that investors should not pin so much hope even on GXS, right? Although it looks promising at this point in time. That goes to say that it doesn't mean that Singtel has no good assets, no good investment. Actually, it has very good core assets. And of course, telco like Optus is one of them. I believe that one way is to de-risk a little bit because they're too heavy on Optus, which doesn't make sense in a way that, you know, their main business is in Singapore. The Singapore consumer business is a smaller slice than Optus. Even you add in a group enterprise together, it's still smaller than Optus. I think there's just too much exposure to the Australian market. They might want to scale down, like how some of their investments are like in Thailand, in India, where it is not really a subsidiary, but more like an investment associate. They still can have a stake, but not such a big exposure. Okay, so once they set it down and deconsolidate Optus, that could free up some capital for Singtel. The second is that they can also spin off like the NCS, which is an IT service provider. The business may not have a very big overlap with their telco business, and hence being a standalone company may give a lot more autonomy, a lot more space for the CEO to think about how to grow the business. And then last but not least, I think Digital Infra Co will be the sexiest spin-off of all for Singtel. because data center REITs are very hot and it is a data center play. So once they form a REIT, I believe that there could be a lot of interest from investors, right? Just like the Netlink Trust that they did, and it's still paying off good dividends after the spin-off. So I do think that this could be a way for Singtel to unlock value as well. So this is the summary, right? As you can quickly went through what is going on with Singtel, we now have a better picture that Singtel is not in a very good position. It does have good assets, but it's also suffering from a conglomerate discount because there's no growth, and and the worst is that when there's bad news, the share price go down even further, okay? And there's no plans for any spin-off. So when there's no spin-off, there's no excitement for the stock, and it's very difficult for the share price to go up. And moreover, Singtel is a very heavy stock, okay? It takes a lot of money to push the share price up. So it's not so easy to move the share price itself. And it does pay consistent dividend, right? So that is also one of the key things that investors like about Singtel. They want the dividends, they want a steady stream. Even during bad times like COVID, they still pay out dividends. But the problem is the dividend yield is not very exciting, right? It's like give you 3-4%, those below 5% kind. And in this kind of era or environment where the interest rate is so much higher, it gives very little compelling reason to buy Singtel even as a dividend stock, okay? Because you still run the risk that share price may go down further when there may be some more bad news that they may come eventually. So hence, it just doesn't make a good investment case, right, at this point in time. So that is my review of Singtel. And I definitely hope that Singtel, being one of the key strategic companies in Singapore, one of the largest companies in Singapore, I wish them that they can do better, because the Mustang is also a big shareholder of Singtel. And I also want Singapore to do well, to make more money, and hopefully they can, do things better, right? Otherwise, it has been really quite frustrating, and 10 years has been a long time. And delivering a negative return after 10 years for shareholders is something that I believe a lot of shareholders cannot accept. Okay, so hopefully now you understand what's going on. You can make a better informed decision. And remember to like this video, subscribe to the channel, and I'll see you in the next one. Goodbye.